In principle, valuation of intangible assets like media content is not very different from valuating, say, a company that produces soap. Firstly, you must identify the assets. In case of a media firm, in addition to traditional assets like fixed property, liquid capital, etc., the brand value and the influence of its content on the readers can be considered assets. Second, you must determine the context of valuation. For example, open market values. What is the value of what you are offering in contrast to what is being offered by the competitors in the market? For example, if you're the only local news channel in Mumbai, the value of your company will be much higher than in the case where there are 10 such companies. Of course, if you are the only channel and there is no market for a local channel, that is a different case. At last, you must select and apply appropriate valuation methodology. These methods include 1. Cost method. This principle states that an investor will pay no more for an asset than the cost of obtaining it by purchasing or constructing a substitute asset of equal utility. Market method. This principle concludes that in a free and unrestricted market, supply and demand factors drive the price of an asset to an equilibrium point. Income method. This approach estimates the fair value of intellectual property by discounting the future economic benefits of ownership at an appropriate rate. If any of the methods are chosen, the role of IP should be to create, maintain, and increase cash flow, without which it would be of no value whatsoever. There are several important factors that need to be established and taken into consideration while performing an IP valuation. These include clear identification of the intellectual property, unambiguous title to the asset, qualitative and quantitative characteristics of the intellectual property, earning capacity and profitability related to the IP, market share supported by or as a result of the IP, legal rights and restrictions, competition, barriers to entry, and risks associated with the IP, product life cycle and positioning, historical growth and prospect of the future.